What's up, everyone? It's Caddy with MoneyVest. So markets here pushing higher on the day. They were gapping up pre-market. We did a live stream and we are going to be restarting a lot of our live streams on market opens. So stay tuned for that as well. Subscribe to the channel and hit that notification bell so you don't miss out on these morning live streams. This week, we also have a very important unemployment week because unemployment numbers are going to be coming out this Friday. It's the first Friday of the month. Tomorrow we've got Joe's numbers, and the day after tomorrow we've got the ADP numbers, ADP non-farm payroll numbers. It is actually a very, very critical month because inflation and the press conference from the FOMC from Jerome Powell falls on the same day, and the summary of economic projections also comes out on the same day. So June 12th, mark that on your calendar, is the day when we have the inflation numbers, and we've got the FOMC press conference and the statement and the SEP release all on the same day. So it's going to be quite volatile on June 12th. And if we can get over 500 likes on this video, on this market update, 500 likes, and if we do that over and over again for a couple more days, I will be going live on June 12th for 8 hours. For 8 hours, I will be going live from the beginning, 8 a.m. Eastern, to cover the inflation numbers all the way through to Jerome Powell's speech. And of course, going over the press conference and also going over the SEP as well. So 500 likes on this market update and we will make it happen. So first things first, markets here on the day, 38,571 for the Dow, down about 30 basis points. S&P 500 a little bit under 5,300, and the NASDAQ just under 17,000 points at the moment. So these are the Joel's consensus for tomorrow. So tomorrow at around 8:30 a.m. Eastern, actually 10 a.m. Eastern, 10 a.m. Eastern is when the Joel's numbers come out. These are the job openings in the United States. Consensus is 8.4 million. Prior number was 8.488 million. So expectations are for job openings to slightly come down. And we'll go over the unemployment spreadsheet to break down the JOLTS versus the unemployed persons ratio as well. So job openings per unemployed person, and that number from the Federal Reserve's perspective needs to come down to close to 1, which is a little bit more of an equilibrium. It was at 2.5 just during the pandemic. Of course, the jobs market was very, very tight and everybody really had a lot of options to pick from different types of functions and roles available. But now, of course, this has been softening a little bit over time. Now, ADP employment report also comes out on Wednesday. That's going to be on June 5th. Consensus 173,000. And prior number 192,000. And then more importantly, we've got the unemployment situation, unemployment numbers, 195,000 expected in the month of May. 3.9% unemployment rate staying intact. That's what the expectations are, with private payrolls 170,000 and manufacturing payrolls 5,000. Participation rate 62.7%, with average hourly earnings month over month increasing by 0.3% and 3.9% year over year, respectively, as well. One more thing I want to mention is that I broke this down in another report from a different video, and we talked about how the unemployment rate, which is the 3.9% as you see over here, is now higher than its 2-year average, 2-year moving average. And that every time that's happened, unemployment rate has followed that up by spikes to the upside, and we've seen levels higher, closer to 5, 6, 7, 8%, and recessions have followed. This has happened the last 3 times. Every time the unemployment rate crosses above its 2-year moving average, we have seen recessions and unemployment to move higher as well. And this is now above its 2-year moving average. So keep in mind, just keep that in the back of your head, that there is a possibility still that the economy does not weather these higher interest rates for longer, and then eventually sort of starts declining and falls into a hard landing scenario. Corporate earnings also start declining and unemployment rate starts going up, and that's when the Federal Reserve will have to come in to make a decision whether to raise rates, cut rates, or to keep them where they are. So S&P 500 valuations are nuts. Why people are still buying? This was another catalyst. Another report came out earlier. The S&P 500 going to hit 6,500 next year if these two factors work together, says this economist. There's been a lot of sort of back and forth between a lot of different analysts and strategists. Some people expecting the markets to go higher to 6,000, 7,000, 8,000. And some analysts expecting the markets to come down, as we discussed in our previous video, a crash of 50-60%, considering that there is a possibility of a recession and, of course, valuations being too high. So there's, you're going to find analysis and updates and sort of predictions in every piece of the spectrum here, from extreme bearish to extreme bullish. in the market. But James Riley, market economist at Capital Economics, says the U.S. stocks have been facing these alternating headwinds and tailwinds for a while. He gives the examples for last week when Treasury yields fell as PC inflation data held no bad surprises, and that helped 9 out of 11 main S&P 500 sectors gain ground Thursday. But with the information technology sector struggling following Salesforce and Dell's poorly received earnings reports, and the S&P struggled to make headway as well. This right here is essentially the performance of the S&P 500's technology sector. Just goes to show how concentrated we're starting to see this rally become, not only just in the technology sector, more specifically now concentrated into NVIDIA. So that is also something to keep in mind. The dot-com bubble highlighted how hard it is to identify the beneficiaries of a new technology as it is developing, meaning that whenever there is a new technology, it is difficult for us to initially figure out who's going to be the big beneficiaries of this new technology. Right now, of course, investors have identified already that chip companies, chip makers, and other big tech companies are likely winners, but we remain at the early stages of AI revolution and in our view of the bubble as well, says Riley, and there is plenty of scope for the gains to broaden as the end users of AI and the dominant providers of these use cases becomes clearer as well. So you can start to see a little bit of a divergence away from S&P 500 IT sector versus S&P 500, S&P 500 IT sector versus S&P 500 equal weighted index, and the 10-year tips as well. So significant amount of divergence, lots of money flowing into technology, more specifically NVIDIA as well. So S&P 500 enters June near record, but with growing concerns about the market's narrow leadership. So this was also related to the narrow leadership and the breadth behind this market rally as it continues to push higher on the back of just simply one stock at the moment, and that is NVIDIA, which is now sitting at just over 1150. Market cap now approaching closer and closer to Apple. Google pushing higher. Amazon was also up. Meta pushing up 2%. Tesla struggled a little bit, down about 1%. Energy down. Basic materials, industrials, real estate, everything selling off except for technology, more specifically NVIDIA, pushing higher, up almost 5% as well. This right here was the PCE numbers from last week, which we weren't able to discuss, but we did have personal income growth of 0.3% month over month, PCE month over month 0.2%, and price index increase of 0.3%. And then, of course, PCE price index year over year 2.7%, and core PCE was sitting at 2.8%, which again is slightly higher than the Fed's preferred number of 2%. That's exactly what the Federal Reserve wants to see. And right now, of course, we are up by about 40% at the moment for the core PCE number, which again is where the Fed's focus is. This right here is the price to earnings multiple on a trailing basis, just to give you a little bit of an idea on where the valuations are for a lot of these companies. You'll notice that Microsoft trading at 35.9, so just under 36. Apple at almost 30, Google at over 26, Meta at over 26, Amazon almost 50, Tesla at 45, Broadcom 49, AMD 243. We got Texas Instruments 30, NVIDIA at 64. And these right here are going to be the price to sales for a lot of these companies. And NVIDIA trades at 33 times sales. I mean, for a multiple that should be a price to earnings, for NVIDIA, it's a price to sales multiple of 33. Amazon at over 3. Tesla is just under 6. Google 6.7. Meta is over 8. Apple's over 7. Adobe over 10. Palo Alto over 12. Microsoft over 13. And one could argue that price to sales multiples have indeed gone up for these companies. I mean, they have gone up to levels that, we haven't really, we're not accustomed to seeing on average for these companies. So keep that in mind as well. Now moving forward, this right here is going to be the forward price to earnings, which is a lot more reasonable. So for example, NVIDIA, the forward price to earnings, it gets cut in half at 31. Tesla's forward price to earnings is 53, goes higher than the trailing because earnings expectations are lower. They're expected to come down in earnings. Amazon a little bit over 30. We got Google at over 20, Meta at over 20 as well. And then, of course, if you take a look at Apple at over 26, we got Palo Alto Networks at 47. So really just there's a few sectors like energy, financials. We got, industrial services. And then, of course, healthcare a little bit maybe that may have some opportunity from a price to earnings and price to sales standpoint from a valuation play strictly. But, of course, NVIDIA, Microsoft, Apple, Google are the ones that are posting most of the growth on a year-over-year basis as well. This is where the VIX is, a little bit over 13 right now, trading in the 20th percentile, still a normal reading. Of course, it came down to a rare reading, and then as a result it did spike a little bit higher and of course pulled back on the S&P 500, which we discussed a couple days ago from last week as well. One more thing I want to mention is that right now we do have our internal access, early access beta launch ready. So it's going to be available for all the existing members in the first week of June. So if you want to access this entire platform, which is the MoneyVest platform, get access to all the amazing stats and data and information, got our own MoneyVest metrics that you can access, simple tables, and also visualize a lot of these charts, income statement, balance sheet, cash flows. If you want to plot revenues, if you want to plot gross profit, a lot of other things, net income. Let's just come over to cash flows. Let's just put in free cash flows as well. Balance sheet, let's just go and put total cash, total assets, and then long-term debt or liabilities as well. You can do that on our platform. We can visualize a lot of things on the platform and also have access to a lot of other functionality, analyst estimates, and then of course we've got ratios. And then we're going to be building on more tools, more features, private content, members only videos, trade alerts, community access. Everything's going to be on this platform. So you can get access to that with, again, our calculators also included. So we've got the discounted cash flow model and the discounted earnings multiple model also available. So link's going to be down below if you want to join. There is a 51% discount right now on the pricing itself. And this pricing is going to be locked for you forever because you're going to be a beta member. And again, there's only a few more spots left if you want to take advantage of that. Link's going to be down below. 51% off plus the 16% additional discount that you can get on an annual basis, and that pricing is going to be locked for you forever. So link's going to be down below. We'd love to have you on board. So first things first, let's talk a little bit about volatility. So it was higher at over 14.3, and then of course coming right back down to 13 levels. We've got, again, levels to keep in mind at 15 to as much as 18 to 20. And again, a very, very strong area of low levels inside this red rectangle, sitting roughly in 11 to 12. And this is a level that we haven't seen, in over 5 years. So that's why we got down to that level for the first time in 5 years. And then you'll notice that we immediately sort of rallied a little bit higher, 30%. Again, because it was a very, very rare reading for the volatility. And of course, the markets here pulled back a little bit, and now volatility is coming back down. Talking about cryptos, so Ether here consolidating sideways, so a lot of consolidation. Support level is going to stay at 3660. Bitcoin, on the other hand, also consolidating sideways with a huge resistance sitting at 72,000 for Bitcoin as well. A lot of consolidation here and support level. Previous resistance acting as a new support here for Bitcoin at $67,000 as well, all the way down to inside this green rectangle. That's going to be sitting right over here with a very massive area of demand and a support at $60,000 for Bitcoin as well. Talking a little bit about our MoneyVest index, so 3.62, and this is also going to be a part of our platform eventually. So we're going to be putting that on a macro dashboard. So you're going to have a macro dashboard which you can access, and you're going to be able to view the S&P 500, the entire market's fundamental and technical positioning, as well as, of course, our MoneyVest index and a lot of other functionality and tools and features and yield spreads and volatility analysis, and everything's going to eventually make its way into the platform. And like I said, over time, let's say over the next 6 months, we're going to be adding a ton of new features and functionality and tools. This is just the beginning. Again, if you were to join in the beta launch, your pricing will be locked forever and you'll get all the new additional features at no cost. So coming back to MoneyVest Index 3.62, again, some of the more important levels are going to be 3, 2.4, and 1.5. So those are the 3 most important levels that I'm watching, and I will be deploying cash and buying a lot more aggressively in and around those prices if and when the S&P, obviously starts pulling back and the markets here starts giving us that better and more favorable risk-reward ratios and tradable opportunities once again. Coming over to crude oil, we're seeing the markets for oil prices come back down $77 a barrel, getting rejected here at this resistance of $80, and this right here is going to be that support level to keep in mind inside this green rectangle as well, and that is going to be that level, of course, of support to watch for crude oil. Coming over to S&P 500, so I've got NVIDIA open right now, very, very massive move. And S&P 500 here up over 11 basis points, so a little bit of a red candle. We did see a massive recovery on Friday where the markets were selling off quite aggressively, and then huge volume came in to push us back to green territory. Resistance for S&P is going to stay put at 53.30, so this is going to be the level that stays intact. Support level sitting roughly at 52.65 to as low as 51.87 on the S&P 500 as well. We did come down from those overbought levels here. RSI, MACD, everything's starting to roll over a little bit, but again, keep a close eye at those resistances for S&P 500. NASDAQ here, same story. It was, again, of course, overbought. We did see a bit of a pullback, MACD crossing below the signal line, RSI also rolling over. and a huge support and an area of demand for NASDAQ here, sitting roughly at 16,400 for the NASDAQ as well. So previous resistance, massive amount of resistance here. Support level is going to stay put right here inside this green rectangle as well. Talking a little bit about Apple now. So starting with Apple, pushing higher to 194, up almost 1% market cap. Now, once again, approaching close to $3 trillion, and it's now approaching a huge area of resistance. So this right here is a massive area of supply and resistance, kind of like a triple top for Apple. RSI is overbought, MACD is overbought. The L3 banking oscillator here also suggesting that there is a peak incoming for Apple stocks. So it's got to be super careful here at these levels, considering that it could get rejected and start to roll over and pull back from these levels as well. If it breaks out, it's going to require a lot more volume and a bigger catalyst for Apple to break out to new all-time highs beyond $200 per share. It's possible though, but again, like I said, it needs to have at least some catalyst to break us out above that level. Amazon validating that support here at this higher low. So very, very nice support level at this ascending low getting validated. Resistance is going to stay put at 188, 189 for Amazon. And like I said, support level is going to stay put right over here, all the way down to 171 for Amazon as well. Lots of consolidation sideways in that range for Amazon, and resistance is going to stay put at 188. Tesla, on the other hand, a lot of consolidation sideways. There's very, very low volume. We got a huge day coming up for Tesla on June 8th and on June 13th as well. The shareholder meeting as well as the performance package for Elon Musk. There's going to be a vote related to that as well. So, there's going to be a lot of volatility and volume incoming for Tesla here very soon. But right now, we're just seeing a lot of consolidation with a huge resistance and an area of supply here inside this red rectangle. It's running roughly between 188 and 211 for Tesla as well. So that is going to be a huge area of supply, as we've already discussed, and a massive area of demand and supports in roughly at 144 to as much as 153 for Tesla at the moment. So a lot of consolidation. I'm going to be selling calls as soon as it gets up to over 190 or close to $200 once again. Talking about NVIDIA now. So NVIDIA pretty much trading at all-time highs. Again, RSI, MACD, L3 banker oscillator, everything's overbought at the moment. Valuation can be argued is at an extreme, and we've got a stock split coming in very soon on June 10th, so next Monday. So of course, prices do go up prior to stock splits, even though it doesn't mean anything for the company, but that's how sentiment works. And of course, we've seen that with Tesla, we've seen that with Apple, we've seen that with Amazon, and a lot of other companies that have done stock splits in the past. Even NVIDIA that has done stock splits in the past, prices have rallied prior to the stock split, and then of course selling off after. So this right here was July of 2021. We did see the markets rally leading up to the stock split, and just a couple days before it started to roll over, and then after the stock split, of course, because it's NVIDIA, kept pushing higher. This right here, of course, was the 2022 bear market and the sell-off. And now NVIDIA is just reaching newer and newer heights every day, up another 5%. So got to be super careful. There's not really much to analyze here other than the fact that we've got a moon at the top. NVIDIA is just making its way up there. Advanced Micro Devices, a lot of consolidation sideways right now. We've got a reasonable support here sitting in the 160s. And AMD here just moving sideways in that range. So this is really what it looks like. So we're seeing a lot of consolidation here in this range for Advanced Micro Devices with a huge resistance at 183, support level of 161. And we do have the MACD, the RSI, and the L3 banker oscillator all suggesting for maybe some potential breakdown below 161 for Advanced Micro Devices, considering that they are starting to kind of roll over a little bit moving forward as well. Talking about PayPal, and PayPal starting to move back up 75 basis points, consolidation here at this support at around $61, $62, and next resistance is going to stay put at 65 all the way up to $68 per share. So those right there, of course, very, very important levels of resistance, and we got a huge triple top supply for PayPal sitting roughly at 68 to as much as $70 for PayPal as well. So a lot of consolidation, support level at $57 per share for PayPal as well. Talking about Visa, and Visa here also consolidating sideways. So we are seeing, sideways action here. Resistance is going to stay put at $282 with a support level at 266 for Visa as well. So a lot of consolidation sideways for Visa. Resistance, like I said, it's going to stay put at 282 down to as low as 266 to as much as $249 per share for Visa as well. Talking about Meta Platforms, and Meta here consolidating sideways, so inside this green rectangle, and that next resistance and target is going to be closer to $513 per share. And right now, again, like I said, we're seeing a lot of consolidation sideways for Meta Platforms, And next target's going to be closer to 514, 530. Valuations, maybe we could argue, is a little bit reasonable or somewhat more on the expensive side. But again, the entire gap is filled. This right here, we do have maybe a smaller gap to also fill after the earnings kind of broke out to the upside to new all-time highs at over 500. Then it gapped down here on the last earnings, and then of course fill the gap to the upside as well. So a lot of consolidation sideways in and around that sort of area of supply, area of demand, and that area of support inside that green rectangle. Netflix, on the other hand, this right here is going to be that support level to watch for Netflix. Resistance and target's going to be back up to almost $700 per share, and another really important support at $597, close to $600 for Netflix as well. Google, a lot of consolidation. Starting to see a bit of a pullback considering how it was trading at pretty much all-time highs at 180. RSI, MACD, and the L3 banker oscillator starting to roll over a little bit. Market cap just over $2 trillion for Google, and support level is going to stay put right over here at around 173, down to inside this green rectangle at around 153, 154 for Google as well. And finally, we come over to Microsoft and Enphase, and Microsoft here really rolling over, starting to sell off. It kind of sold off a little bit over 3% a few days ago. Huge resistance, as we've already discussed, so not a big surprise. This was an area of resistance for Microsoft around 430. RSI, MACD, and the L3 banker oscillator starting to come down. There is some institutional selling happening for Microsoft, I feel, and this right here is going to be that next support level to once again watch for Microsoft, sitting roughly at around 394 to as much as low 400s for the company as well. And finally, we come over to Enphase, ENPH, and Enphase here down about 27 basis points. It's once again approaching its resistance at around 138, so that is going to be a huge level of resistance to keep in mind for Enphase, with a massive support here sitting inside this green rectangle at around 110, 111 for Enphase as well. So a lot of consolidation sideways in and around those levels for Enphase as well. Costco pushing up 68 basis points, reported earnings last week. Beat on EPS, beat on revenue, didn't really move much, but support level is going to stay put roughly around 785. It is incredibly overbought, so I'd be very careful with Costco here. RSI, there continues to be a little bit of that divergence. MACD also on the verge of crossing below that signal line, and institutional investors may be gearing up to starting to dump this stock here moving forward. So the L3 banker oscillator obviously a little bit more overextended to the upside as well. So there you have it. That's the entire breakdown on the markets. You got a big week coming up with unemployment numbers later this week, with June 12th being an even more important day with inflation and, of course, Jerome Powell's speech and the S&P. If you can get 500 likes on this video, I will try to do an 8-hour live stream on that same day, going over the inflation numbers as well as the S&P, as well as the press conference from the Federal Reserve as well. So link's going to be down below if you want to, of course, join our platform, get early access to this beta launch for the MoneyVest platform. And there is going to be a 51% discount right now for the beta launch, and that's a special price that you can lock in forever. At all the new features, functionality, and tools will be added over time at no additional cost to you. And again, you can get another 16% annual discount available with an annual pricing as well. So as always, happy investing, and I'll see you all in the next video.